Time like this, do you just continue the dollar cost averaging and just stay in the market and not get panicked?
Well, that's what people like Warren Buffett say to do. In a falling market, that might not be the best thing, but if you're a long-term investor, it's the safe way to play. I think this market, though, is very dangerous. I mean, you have financial stocks falling like knives day after day after day. So you have to be cautious.
On the other hand, there are some folks out there would call screaming buys. The old adage was if Intel goes below 20, you buy. Apparently, a lot of people did because it's trading just below 20 now. Before it was closer to 19, and a lot of people went in to buy at the last minute.
Yeah, you know what? Before I came here, I wrote in my afternoon update, if we closed less than 200 points down, it would be a moral victory. So right now I'm ready to break out the confetti. But you know what? Just because financials are doing poorly doesn't mean that the companies that sell meat are doing poorly. You know what? A lot of folks have to look at this market. I always look at the market individual stocks. I'd never look at it as a broad market. And saying that, we're at a 2-decade low in terms of valuation. There are values out there, and you know what? If I had a 401k and I could afford it, I would double up on the amount I put into the stock market right now.
Oh, now Gary Kaltbaum doesn't exactly feel that way, particularly when it comes to Citi, where you say this thing's going down into the teens. But do you see some buys out there right now, as in stocks are on sale?
Look, there are always things that can potentially buy, but I have to make a very important point here. With all these reversals we've been seeing on a daily basis, with all the rumors we're hearing, with the Fed going from 5.25% to 3% and going lower, with all the bailouts we've been hearing about, guess what? The markets are at about closing lows for this bear cycle. So it has been very tough, and I'm just not so sure the end is near. I think there may be more pain to go. And very important, sometimes just protect capital. Don't try to do too much. There'll be better days ahead, but we ought to get past this.
Well, and to quote from Gary's own newsletter, the economy is spinning lower and inflation is spinning higher, Peter Schiff.
Of course. And you got to remember, most stocks are still expensive. And look at the trend. The NASDAQ is down better than 20% in the last 4 months. And if you price it in gold, it's down almost 40%, twice as much.
And we're not where we were in 1999.
And so there's no reason to try to be a hero here. The market's going lower, but more importantly, the dollar's going lower. So you really got to be defensive.
If you tried to dollar cost average in Intel, it was at 80 in 1999. So, you'd have a lot of Intel, but it's only worth a quarter of what you were paying for it on the way down.
And you didn't get much in the way of dividends while you were waiting.
Exactly.
Gary?
I just want to say something about technology because we were talking about that. You got to be very careful that Intel's doing a little bit better today. The semiconductor index is already down 40% in the last 6 months, so maybe a lot of this has been discounted, but that doesn't mean things are going to get better and things are going to turn up. There's still some serious issues out there in technology land.
Well, it's true, Gary, but again, if you talk about selling millions and millions of iPods and iPhones, and you have Apple stock up over 2% today, I mean, there are some real products being sold out there that lead to market share.
Oh, absolutely. But look, Apple for me is an exception to rule. This is just an unbelievable company with amazing products. But on the whole, if you look at the charts of all the semiconductors and most stocks in technology, they do look like a horror show. But Apple is different.
Okay, we're less than a minute away from the closing bell. Charles, the NASDAQ composite turning positive, erasing as much as 37 points in losses. That's going to be the headline, I think, tomorrow.
That will be a headline. We'll share space with all the normal bad news. But listen, the fact of the matter is we're just marking time until Friday with the employment data, and this market really is poised to go in either direction big time. But there's a lot of money on the sidelines that will love an excuse to come in and buy this market up.
Yeah, if we see huge losses in job creation for the month of February, Katie barred the door, I think.
The headline today is Peter Schiff is just trying to help.
There you go.
That's all I've been doing.
All right. We're going to leave it at that as they're applauding on the streets. They're applauding a negative figure, but part of the reason they're applauding is because it was so much further negative before. It was down 200 points. It came back to close down about 40 points.
And gold getting hammered today. Sorry, Peter, down about $18. He can't win every day, can he? But he wins a lot. So what we have here is lower crude oil, lower gold, and a lower market, except for that NASDAQ, and the trading day comes to a close, but the business day continues.